Hey traders, in this free video I want to recap, actually review some of what we talked about in the previous video. I like to keep these conversations evolving so we can add some more depth and structure to some of the conversations we've had in the past, and this one's going to be relatively recent because just yesterday we talked about the Pitbull Low and I went over all the details of that particular setup that we see, or not even setup, but tendency that we see at the second week, Thursday and Friday of each month. So here we are, and these are the same notes from yesterday, and what I'm focusing in on is this. Right in here, we're ending up getting actually pretty darn close to a pattern that I call a minor low. I don't call it that, that's what it is called. And a minor low is basically candle 1, candle 2, candle 3, and this is the minor low surrounded by 2 lower highs, just like that. Now what we have this time is down candle, small candle. That candle ended up being just a small, almost inside, well, not quite inside day, but that's the, so this one I won't worry about. That's actually fine. This is typically a 3 candle pattern. I don't mind that it's 4 because that doesn't throw it off at all. But what I'm looking for tomorrow is a candle that looks like this. Or we could have candle, small candle like we did with slightly lower low. Today's candle with the lower low and maybe an inside day, that'd be fine. And maybe Monday ends up being the up candle. But this low here I am looking to see hold, and that would complete the minor low pattern that I'm looking for right there. Why is that so important? Well, I do anticipate this market is not going to want to short in front of Jerome Powell on Wednesday. I anticipate this market is not going to want to short the overall strength we continue to see. I've got a couple interesting volume weighted average prices anchored here. One is anchored to the, I believe it's the 26th of December. And the other anchor that I have here is the 3rd of June. And as long as we remain above both of these, I am feeling very positive about being on the side of the big money flow. I don't believe that we're seeing big money bail in this market. Can't fight the Fed, and that's something that we're not hearing enough of. I think we're going to be reminded of that pretty swiftly on Wednesday. So moving forward, the long positions that we still have, I will be keeping, but let me talk a little bit about targets. For sure, if we end up in this area, that to me, if we do, which would be phenomenal, but if we end up in this area, that certainly is a non-negotiable. Take profits, scale out, not get flat, but scale out. I'm a big fan of scaling in and scaling out. But I'm really going to use what I call an eject button. And that means a time-based exit. And in this case, that time-based exit is going to be a cutoff of next Tuesday. Next Tuesday is when I want to be looking at getting out of the long positions that I have in both equities and equity futures. So we're talking about next week, the 18th, the day before the FOMC. Okay, so that's the pattern I look at going into these Pitbull tendency, this phenomena we know. And the pattern is occurring. I am bullish, but I'm looking to scale out on Tuesday. All right, well, I'll see you in the next update.